Hello everyone, thank you for joining us this Saturday morning and welcome to this educational presentation of buy, sell, or hold. Well, this tool tells you in seconds. I'm going to be sharing with you one of the most powerful tools and techniques we have at Specialist Trading and Pro Trader Strategies today. And I've often stated that if I were stranded on a desert island and could only use one tool to trade with, it would be this. And you're going to be able to apply this as early as Monday, if you'd like. So for example, let's take a quick view of this chart of the spiders. Now this is going back from July up until October of this past year. Now when the market was steadily heading upwards, it was pretty easy to make money. Everyone was a genius, everyone was doing great. But then this happened in October coming into the end of the year. And this is where a lot of people lost money. All of a sudden, all the great strategies and systems that you paid for didn't work anymore because you were out of sync with the market, the current market conditions. Well, this tool I'm going to be sharing with you today is tremendous at really putting you in sync with the current market conditions. Therefore, you can trade in sync with the market. And this is all going to be displayed and easily applied through our new platform, the PTS Primo Charting Platform, that teaches traders how to actually listen to the market, because that's really our concept of what makes you a successful or consistent trader, by listening to the market rather than listening to outside noise. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. So we are first and foremost an educational company. We're a little bit different from other webinars you may have attended in that our only goal is simply to educate you. We have strategies, we have tools and techniques, we have a platform for you to trade with, but our only goal is really to apply these things so that you can learn and make your own decisions. Because if there's one thing I've learned in over 40 years of trading, it's that the only way one becomes a consistent trader is through making their own decisions and becoming a part of the process, not relying on someone or something else to tell you what to buy or sell. Now, as I stated, I've been trading for actually 42 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. Doesn't mean you're any more special than anyone else. It just means that a specialist was someone who made markets or who specialized in making markets in roughly about 50 or 60 stocks. So let's say you wanted to buy or sell, let's say IBM, one of the stocks I made markets in. You would contact your broker. Your broker would in turn call the floor broker on the floor of the exchange, who would in turn walk up to the person who specialized in that market and made a market for you. So if you wanted to buy or sell 100 shares, you would go up to the specialist and he would sell it to you. So I did that for 9 years. I traded through the crash of 1987 and the bull market that followed. So I've seen and traded just about every market environment you can think of, straight up, straight down markets. And plus, on top of that, I have traded just about every system, every method, every technique you can think of. They've probably been renamed or rebranded, but trust me, they've all been out there before. So in my 4 decades of experience, I know what works in terms of consistency, and I know what doesn't work. So why waste your time and most especially your money searching for that holy grail when I can tell you in our courses and in our teachings what works with consistency and what doesn't. So as a matter of fact, for example, today I'm going to share with you this tool that has one of the highest levels of consistency in my observance through this past 4 decades. And you'll be able to, once again, apply it and actually go back and look at your own trades as early as the next hour once we've concluded this presentation. So once again, this promises to be a great educational webinar. But before we begin, as always, we are first required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, once again, we see a lot of new people here today. We have a pretty big crowd here this Saturday morning. Thanks for attending. And if you haven't done so already, I'm going to invite each and every one of you to follow us on Twitter. There's our handle right there, at Specialist Trading. You may want to copy that down, the abbreviation. I post different things on a daily basis, anywhere from signals or some of the tools on our platform and what they're generating at the moment to actual little bits of financial wisdom, things I've accumulated along the way. So there's our handle at SPCLSTTRADG. Once again, copy that down and feel free to follow us on Twitter. Lots of great free educational information posted on a daily basis. Okay, now, once again, as we stated in the opening statements, we are first and foremost an educational company. As I stated earlier, my goal is not to force feed you signals the way so many other supposedly educators do. My goal is not to tell you what the perfect time frame is or what the perfect market that you should be trading. I don't believe in that. In fact, our entire philosophy goes against that. What we want to do is put the power in your hands. We want you to make your own trading decisions. And the only way to do that is by being provided with sound fundamental education that has stood the test of time. See, most traders don't want to make their own decisions, so they figure someone who's been trading for 10 or 20 years knows better than they do, right? They have more education, more experience, more money, so they must be right, so I'll just mimic and copy whatever they do, piggyback along with them. And that couldn't be further from the truth. I mean, that really is the reason why most traders fail. So what we want to do is put you in charge, and the only way we can do that is by giving you education so that you feel comfortable in making your own decisions. This is the same way I was taught some 42 years ago, and trust me, this is what I believe has been the cornerstone to sustaining my trading for the last 4 decades, okay? Now, since this is going to be an educational class today, I want to take your questions, but please wait till the end of today's class. I promised I'll get to each and every one of them. We're a little bit different from other webinars. I don't like to stop at every slide because if we do and answer a question there, then we'll be here far too long. I don't want to take up your Saturday morning. I want you to enjoy the day. So if you happen to have a question, please wait, write it down, and try to remember it. Oftentimes, if you wait for the next slide, your question will be answered, okay? But if you have a question, just wait till the end of the presentation. The only question I will answer is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you're having technical issues, don't worry. We will send each and every one of you a link to this recording so that you can watch it at your own leisure, okay? Once again, we have a good crowd here today, so please wait till the end of class to ask any questions. All right, so let's begin today's class. Now, I'd like to start out with some facts to wake you up this morning. The facts are 80% of all traders will lose money. And when I say lose, I don't mean, well, yeah, I had a bad month or a bad couple of weeks. No, we mean losing everything, all the money you've put aside for trading. Okay, this is just facts that go back years and years and years. Now, 80% of all traders will ultimately lose. This means that 15% of all traders will just break even, okay? So if we have 100 traders at this webinar today, 80 of you will lose mostly everything you have, and 15 of you will break even. And that's actually not bad in today's markets if you're breaking even, but I'm sure you're putting in a lot of hard work, you're studying a lot, you're spent a lot of money, and you're just basically treading water. You have nothing to show for all of your hard work. So this ultimately says that only 5%, that means if we have 100 people listening today, only 5 of you will be consistently profitable, okay? That's not a lot. Now, if we want to look at this on a pie chart, this is the percentage of traders who are profitable. That large red portion is the percentage of traders that will ultimately fail. That blue slice there in the middle represents the percentage of traders that will break even, and that small green sliver there only represents the percentage of traders that will consistently be profitable, okay? It's a little bit discouraging, but I'm not saying this to discourage you because we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, I know a lot of you believe, you probably have been taught this, that trading is a zero-sum game, that there's only so much out there every day, that every time someone wins, someone else is losing. And sure, that may be true, but that is really, in my opinion, a really faulty mindset to have. That would be comparable to saying, well, for every breath I exhale, someone is taking in that breath, so there's only so much air to go around. Because that leaves you with the mindset that there's only so many profitable trades to go around. And that's silly. There are just innumerable amount of opportunities on a daily basis. It's just like a big pie in the sky. The market is giving you as many chances as you want to take to be profitable. So there's not a finite, limited source of potentiality for you to be consistent. So if it's just, out there, if there's so much, an unfathomable amount of chances for opportunity, how is it possible that they're captured by such a small percentage of traders? Well, it's not as difficult as it seems. In fact, it's actually rather simple. These traders, whether they know it or not, are consistently on the right side of the market. All right. Now, what do we mean by the right side of the market? Well, we mean that they're listening to the market. They found out a way. They either know it instinctively, or they're using a tool, or they just kind of have a great feel for the markets to know what the market wants to do. And we're not talking about picking tops and bottoms, okay? There's probably even a smaller percentage of traders who know how to do that. We're not talking about that. We're talking about being able to look at a market and just say, well, and have a sense that it wants to go in a certain direction, or even if it doesn't want to go anywhere, but just having that sense and then applying your strategy, your method in that direction. This is what we mean by becoming consistent. It's similar to someone swimming with the current at your back. Not swimming against the current, against the flow, but swimming with the current at your back, so that you have a feel of that you are in sync with the trend. So we ask ourselves, what if there were a tool that were automatically designed to put you on the right side of the market? Because this is really what's difficult about trading. Think of it. When you lose, you're doing the opposite of what the market wants to do, right? You're probably buying and the market wants to go lower, or you're selling and the market wants to go higher. But when you're in sync with the market, when you buy, the market goes up, and when you sell, the market goes down. But what if there were a tool that could help us to make it a little simpler so that it wouldn't so difficult to figure out? Well, there actually is. It's called the buy-sell line. As I stated earlier, this is one of our most powerful tools we have at Specialist Trading. I've been using this for over 4 decades. As I stated earlier, once again, if I were stranded on a desert isle, I can only use one thing, it would be this. Now, I know your first thing you're saying is, okay, I get this. This is a big sales job. He's going to charge me $5,000 for this tool, and I'm going to have to, that's the only way I can get this, right? So, great, he got me on this. He baited me, and now the only way I can find out about this buy-sell line is by spending 5 or 10 grand, right? No, in fact, you have this tool right now. It's just simply the 50-period simple moving average. You have it, whatever platform you're using, whatever you're looking at, you can apply this for free. Now, the only difference is that most people use it incorrectly. This is how to use it properly. Before you trade anything, before you buy or sell, I don't care what system, what strategy you're trading. I don't care if it's based off of, fundamental analysis. I don't care if it's based off institutions, Fibonacci. I don't care if it's based off the full moon. But before you pull the trigger, ask yourself, where is price in relation to the buy-sell line? Okay. In fact, I would go so far as to require you to write that down on a little piece of Post-it paper and post it on your computer screen, so that you're always asking yourself before you pull the trigger, where is price in relation to the buy-sell line or the 50-period simple moving average? Because if you have a 50-period moving average plotted there, and I don't mean a 50-period moving average plotted of the higher time frame or the lower time frame, just a 50-period moving average plotted of whatever time frame you're looking at. If you're looking at tick charts, if you're looking at monthly bars, weekly bars, it makes no difference. But whatever time frame that is, you have to have a 50-period moving average plotted. And you'll only come up with 2 possible scenarios, because if price is above, then you will be only looking to buy. In other words, you'll have a buyer's bias. That's it. You can't have a sell signal if price is above the 50-period moving average. I mean, you can have a sell signal, but I would strongly suggest not taking it. Conversely, if price is below that 50-period moving average, then you will only be looking to sell. You will have a seller's bias. Okay. Now, is this 100% proven strategy? No. It just has a high level of consistency. And remember, we're trying to make you a consistent trader because that's what will sustain you for 20, 30, 40 years. We're not trying to say that this works 100% of the time. I'll show you some examples in just a few minutes where there were big rallies below the 50-period moving average and huge sell-offs above. But that's okay. Remember, you're not a gambler. You're not looking to hit that jackpot. What will sustain you are singles, these small little moves that you have in your favor. That's what we're looking for. And if you want to be a consistent trader, you have to use this simple rule. Okay? So let's go back and look at this example of the spiders. This is a chart going back to summer. Okay, obviously someone would say, well, yeah, Steve, how did I know we were going to go up? Sure, I was doing well here, but then this happened. And how did I know the environment was totally going to change? The conditions were changed to the negative side. And it's funny, my strategy was working great the first part of the year. Then the second part, it was terrible. It didn't work. This is the way most strategies and systems are. They're designed to work great when everything's, following the plan. But when the market wants to change its personality, these systems, these strategies don't know how to alter and shift with it, okay? You have to be able to do that. And by adding the 50-period moving average, it tells you what side you should be on. You see, while the market was going higher the entire time, the spiders that represent the S&P 500, we were above the 50-period moving average. So it was easy to be a buyer. You don't want to sell anything. But once we went below that, the first week of October, that was your clue to not buy anything anymore. Sure, you could have taken your shot and tried to go long down here and say, hey, Steve, that worked pretty well. But wouldn't you have done much better if you simply sold every time there was a rally? Or you would have had a lot better opportunity to be in sync with the market because price was below the 50-period moving average. I know some of you may be saying, well, yeah, Steve, I don't trade daily bars. I'm a swing trader. I like to look at weekly charts, maybe even monthly charts. Okay, here's a weekly chart of the spiders, the same time period, but going from 2016, 2017 up until October of last year. Now, the market was relatively moving higher. We had some sell-offs right here in beginning of 2018, but then we made new highs. Now we started to head lower, but we were still overall, for all intents and purposes, in an uptrend. And then this happened. This is where everything went out the window. None of my systems worked. That signal service I subscribe to, or that blog, or that chat room I look at every day, nothing worked. They were losing everything, right? Well, let's apply the buy-sell line. Now, as we were above, from 2016, we continued just to have a buyer's bias. It wasn't until this area right here that we had consistent closes below that we turned into a seller. Now, you don't have to be a seller. You could have just said, you know what? The market, not some guy in a blog or some guy in a chat room, but the market is telling me it wants to go lower. So guess what? I'm either going to look for shorting opportunities, or I'm not going to trade at all. I'm going to get out of my positions and stay out till it tells me it wants to go back up again. Remember, you're in charge. We're not telling you how to trade. If you want someone to tell you what to buy and sell on a nightly basis, you should be attending another webinar, because we don't believe in that. Remember, that's what contributes to that 80 percentile of people losing. I'm not here to have you become a loser. I don't want to teach you to become a loser. I want you to be trading 20, 30, 40 years. And the easiest way I know to do that right off the bat is to share with you this great tool that was shared with me some 4 decades ago. Now remember, if price is above, you have a buyer's bias. If price is below, you have a seller's bias. Now, I know a lot of you will say, well, okay, so Steve, I look at the weekly and then I decide from that what to do on the daily to have them in sync with each other. No, you don't have to. Trust me, in my 4 decades of trading, I have found no consistency in that technique. I know it's very popular that you have to look at higher techniques to find the lower one. If you want to do that, I'm not here to tell you how to trade. I'm here to teach you what works. And in my 40 years, I found no consistency in that. In fact, the only thing I found is that keeps me out of good trades while I'm waiting for the 2 different time frames to line up. So if you want to use that, feel free, be my guest. But it is no way required. Our credo is only trade the chart that the signal was generated on. That's it. So if you're looking at a 5-minute chart, you don't have to worry about what the higher time frame was. We're not concerned with the hourly or the daily bars. We're not concerned with that. We're only looking to see where the buy-sell line was on that 5-minute chart and where the signal was generated. That's it. Keep things simple. Now, here's a chart in DBM, okay, coming from August all the way into the end of December, the end of last year, okay? Someone looking at this would say, well, yeah, Steve, it's easy to see we've been in a downtrend, but I would have liked to have known earlier, because I kept buying this all the way down. Here was major support. And then here was more support. That chat room I go to said that all the institutions were buying here. And the institutions are never wrong, right? And so this was good support. But then it broke it. And so this was better support and it broke that. So how would I have known? I wish I would have known somewhere up here. Well, once again, here's a tool that almost everyone has access to. It's free. It's a 50-period moving average. And you would have known well in advance. Once you had these closes below, consecutive closes, well in advance, in fact, August, when price was much higher, that you should not be buying this. Now, I'm not telling you this. Some strategist is not telling you this. Some guy in a blog is not telling you this, and the earnings aren't telling you this. Who's telling you this? The market. The market is below its 50-period moving average, and it's telling you most likely it wants to go lower. So why would you argue with that or trying to step in the way with that? Remember, our job is to get you in sync with the market. And this is why we present you with these tools and these educational pieces here. Remember, if price is above, you have a buyer's bias. If price is below, you have a seller's bias. Here's the one major problem that most students of mine have. They say, Steve, God, I love this buy-sell tool you told me about, the 50-period moving average. So when I have a close above the 50, then I buy, right? Or a close below the 50, I sell, right? No, that would be a strategy, because a strategy tells you when to buy or sell. This is not a strategy. This is just a tool to get you on the right side of the market. Once you know what side to be on, once you have that bias, then you have to apply structure in the form of a strategy. We're not really talking about strategies today. The first step is getting in sync with the market. Here's an old example in UA, okay? This is the way most traders trade. They say, well, Steve, you know, I was always taught to buy low and sell high. So when the market came down here, all the indicators were oversold. We bounced for a little bit, but then look what happened. Now, here's where major support was, that class, that $5,000 to $10,000 class I took based on the institutions. And guess what? It bounced pretty well. So I got really excited, but then a month later, it was making new lows. This is the way most traders trade. It's very hard when you try to swim against the current, when you try to trade against the trend. If we applied the buy-sell line, we knew well in advance the market was telling us it wanted to go lower. So rather than try and pick bottoms, why not just sell every time we make some type of a top here? You're going to have much higher level of consistency. Another older chart here. This one's in CREE. Now this is a little difficult, and this is why we want to share with you, because nothing's going to be as easy as it always seems. Sometimes there's some kind of rangy market, and it's difficult to figure out. For example, we're basically going lower to sideways here. How do we figure out what's going on? Well, we apply the 50-period moving average, the buy-sell line, and initially we were below, so we should only have a seller's bias. But from this point, we start to creep slowly up here, and now we're pretty much oscillating above and below. So what do we do here? Well, here's our rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established, okay? So just because one bar closes above or one bar closes below does not mean that's the beginning of a seller's or a buyer's bias. Wait for at least 3 to 5. This is your own discretion. You can use this. It's up to you. So as we see here, well, we were initially below, so the market is telling us it wants to go lower, but at this point, we start to have closes above. In fact, we had a total of 5 closes above. So the market, even though it's not doing anything, it's actually whispering to us it wants to go higher. Why? Because we had a total of 5 closes above the buy-sell line. I know this seems too simple to be true, but look what happened. The stock took off. And this is where most traders love to play the victim game. They go, boy, I wish I had known this thing was going to go up. Then I would have looked for some signals to buy this on. How did I know this thing was going to take off? Well, now you no longer have to play that victim game. Traders love to be the victim because when you play that victim card, you can always blame someone else for not getting into a trade or for losing money. And this, in my opinion, is why most traders listen to someone in a chat room or a trading room or a blog or some so-called trading guru on TV, because they figure like, well, if this guy knows what he's doing, but if he's wrong, it wasn't my fault. It was this guy's fault. So that way you take yourself out of the game and you never have to take responsibility. As a trader, you have to take responsibility. This means you have to be a part of the decision-making process. So with the buy-sell line, you will make your own decision as to whether you should be buying or selling. Let's look at this chart here in MRK. Remember we talked about 100% foolproof, that nothing works 100% of the time? This is what we mean by this. Now, the buy-sell line is a very consistent tool to get you on the right side. It does not mean it's going to automatically make you a millionaire, have you retire in 6 months. Let me show you what I mean here. As we look at this older chart in Merck, we were below the buy-sell line, but then we were above here. As we can see, we had 5 closes above. Let's say your strategy called for a breakout right here, and you got long at this point because we had some type of resistance, and you got long right here, okay? Well, you look pretty good for the first week, but then price started to head lower. And now you actually have a loss. If you didn't get stopped out, you're in this trade now, it's not winning. And so you're saying to yourself, this buy-sell line stuff doesn't work. I've got a loss here. So what we see here is, once again, price is trying to tell you something. All right, even though you've got not a major loss, but an average loss going on here, you're wondering what I should do. You're hoping for this bounce. Look at the market. What is the market telling you? Where someone else would be saying, this is major support. Look at this is a great Fibonacci support line. The institutions and the volume confirm this. You've got to buy this. How many closes do we have below? We have 9 closes below the buy-sell line. The market's not whispering that it wants to go lower. It's screaming it wants to go lower. So if you weren't stopped out of your initial long trade, now would be the time to get out. And if you were more aggressive, now would be the time to go short because Merck fell 8 points in the following week. So you could have made back what you had originally lost, or at least stopped yourself from turning that average loss into a major loss. Now, I know if you're saying, okay, I guess it looks pretty good, but how do I know you're not cherry picking this stuff? Okay, Steve, you haven't convinced me yet. And trust me, I know what you feel, because when my mentors taught me this same thing 42 years ago, I said the same thing. I said, come on, this is just too simple. This can't be this good. There's got to be examples where it just is so faulty. Well, remember, it doesn't work 100%, but let me share with you how important this is, just to convince you that you should start applying this. Here's a chart of the Dow on our platform, okay? As you can see, the Dow was going higher, and then it started to go sideways. Not much of a clue as to what it wanted to do here. So it looks pretty familiar. Here's the only problem. This is from October of 1987. Remember, I was on the floor during that time, okay? This is prior to the crash of 1987. Could this have given us a tool, the buy-sell line? Well, all you have to do is apply the buy-sell line. And coming into that period, well, we were above. So you only had a buyer's bias. But look what the market started to do here. It oscillated above, below, above, below. So this was a tremendous red flag. It was the market giving you a warning, because when it's kind of oscillating above and below, it's basically saying there's indecision. And it's actually giving you clues, because look at the times we closed below. You had 3 closes below, and then you had 3 closes above, followed by multiple closes below. And then about 3 to 4 closes above, followed by 3 more closes below. So the market is giving you a huge warning. Now, this does not mean you have to go short. You could actually not even sell everything you had in your portfolio, but you maybe would say, you know what, I'm going to maybe sell half of it, or maybe I'm going to raise my stops, because look what happened after that. The crash of 87 would have been comparable to a one-day market drop of 4,000 points. Now, the crash of 87 was actually this day right here. Look at the prior downward movement before that day. So this saved you all of that, and you could have raised your stops and been out of the market possibly at this level before that crash happened. Think of it. Think of the market being down over 4,000 points in one day, all right? Now let's look at another chart. Here's a weekly chart of the Spyders, all right? Now, the Spyders are the ETF that represents the S&P 500. Same thing. We're above the 50 period, the buy-sell line, but now we start to have some red flags here. We close below, close back above, now close below. Here's the only problem. This is not a current chart. This is January of 2008. Okay, we all remember what happened in 2008? Well, let me give you a little refresher. The market was kind of oscillating above and below the 50 period on a weekly time frame. We had closes below. Then we had 2 closes above, followed by 1, 2, 3, 4, 5 closes below. Okay, so the market was telling you, be careful. All right, I'm closing below this a lot. If I really were strong, I would still be above this a lot more than I am below it. So you may want to raise your stops. You may want to exit a portion of your position, or maybe if you were thinking about going long, maybe you might want to, say, you know what, I don't think so. That guy in that chat room loves the market here. I don't think I'm going to buy anything. And that would have been sound advice, because we all know what happened. That was the beginning of the 2008 financial crisis that lasted 2 to 3 years. Now, this is a weekly chart, so it can be applied to any market, any time frame. So go back and research your last 10 to 20 trades, okay? I can almost guarantee you, if you're looking for guarantees, I can almost guarantee you that your losses were due to the fact that you were out of sync with this simple tool, the buy-sell line, all right? Remember, this is not a 100% foolproof strategy. It's not meant to trade with. It's simply meant to get you on the right side of the market. And once you're in sync with the market, your consistency will increase. So that's all we're trying to do. Remember, look at your losses, okay? I can almost guarantee that the reason why you lost, if you go back and look at your last 10, 20 trades right now, your most current trades, you were buying below the 50-period moving average and selling above. Remember, we do not need to look at different time frames. You can if you want to, but it is in no way required. If you're looking at a daily chart, the only thing you're interested in is the signal that is generated on that daily chart and the 50-period moving average on that daily chart. If you're looking at a 1,000 tick bar chart, if you're an intraday trader, you're only concerned with the signal that was generated on that 1,000 tick bar chart and where the buy-sell line was in accordance to that tick chart, okay? That's all we are concerned with. Now, if you're still not convinced, I want to talk to you about an even better way to view the buy-sell line. This is our fluid feature that is available only on the PTS Primo Charting Platform. The beauty of the fluid buy-sell line is that it not only tells you the overall direction of the market, but it also tells you the momentum or the strength of the market as well. Let me show you what I mean here. Here's an older chart in GE, all right? Obviously, it's been in a downtrend. With our platform, all you have to do is click on the buy-sell line tab. That's the very first tab in our green strategy tab section up here. Click it on, you'll get a drop-down menu. And the buy-sell line is simply the 50-period moving average. You can see it here in its most basic form. We have different ways of viewing it. Let's take our new feature, the fluid feature. Once you click that on, it will automatically change the back of the screen. Okay, now you remember that old adage, the sailor's adage, red sky at night, sailor's delight, red sky or blue sky at morning, sailor take warning. Well, we've used that same adage, but for applying it to the fluid buy-sell line. Because with the two different colors here, we say red sky at morning, trader take warning. That means that the market is telling you it wants to go lower. If price is in the blue zone, well, blue sky at night, trader's delight. That means you should only be a buyer. So what was the market telling you right here the entire time? Telling you it wanted to go lower. You see how simple this is? So even if you don't like to apply a 50-period moving average, you can have this all the time on your screen because it automatically changes it for you. Now, this is what we're talking about, the strength of momentum. We have found, once again, not guaranteed, but this strong downward slope is where many times you'll find the best setups. All right, let's look at this older chart in HBQ, okay? Looking at this, we say, well, okay, it was kind of going sideways. It had a breakout, but then went sideways and then went higher. You know, how would I have known all this or know which side to be on? Well, once again, click on the buy-sell line fluid feature. Red sky at morning, trader take warning. So at this point, we were only looking for sell opportunities. But once we had consecutive closes above, right here, blue sky at night, trader's delight. We're only going to be a buyer. So even when we had this sell-off right here, this was a buying opportunity. This is where people say, hey, we've topped out, double top here, major resistance with the institutions. The volume and the Fibonacci's are not supporting this. So this is probably going to go all the way back down here to fill this gap. You know, this is the way most traders trade, myself included, when I was trading like this 4 decades ago. It didn't work then. Trust me, it's not going to work now. Why not just look at this as a buying opportunity? We're in the blue zone with a buyer's bias. Look at the nice buying opportunity you could have had here. All right. Now, once we have this nice, strong, steep upward slope, you could have taken advantage of a lot of nice setups using our strategies or any one of your strategies that you would like. Here's that example of the spiders on the weekly time frame. Remember going back to 2008. All right. We apply the buy-sell line, click on the fluid feature. This is how simple it is on our platform, and we automatically change the back of the screen. So we could see right here, we have a better idea that we're having trouble. You see how we're, oscillating above and below? This is the market telling us we're having trouble at this level. So be careful, take warning. And that was the beginning of the 2-year bear market. Okay, now a lot of people say, well, what about news, Steve? Okay, because news kind of just, there's no way you can predict news. Many times a news event comes out and I'm on the wrong side. Even if I'm on the right side of the buy-sell line, the news comes out and it discards the buy-sell line. It'll do whatever it wants to do. Well, sure, that can happen every once in a while, but it's been my experience by using this for 4 decades now that oftentimes the news is in sync already with the buy-sell line. So you're already that much ahead of the game. For example, We all remember what happened here this last fall, and Amazon was now a $1 trillion company. Okay, it followed Apple's footsteps and was reported a $1 trillion company. If we look at the chart, well, this is where the news came out. All right, this is the way most traders trade. You know, they feel like, well, I'm not sophisticated. I didn't go to Wharton Business School. I just like to invest for my own portfolio. And so this has got to be great news, Amazon, right? So I'll buy something off of this news. Well, if you had used the buy sell line and our fluid feature, you would have known well in advance that this was only looked at as a buy. You didn't have to wait for news to tell you that you wanted to buy it because the market was above the buy sell line. In fact, going all the way back here to May, you could have used this as some type of warning that it wants to go higher. And every time we sold off here, this was a buy opportunity. Every time there was a sell-off, it was a buy opportunity, okay? Now, that was an older news announcement. What about something that happened last week? Ubiquity Networks up sharply today, okay? Yahoo Finance reports that the stock UBNT was up nearly 16.5% Friday after the networking hardware specialist announced strong fiscal second quarter 2019 results. Okay, so great fundamental news. Traders say, hey, this is what I've always been taught. You buy a strong companies that are making money, that have strong earnings. This is great. I want to get into this stock, but most likely it's going to be higher 10 years from now. And this is when the news came out, right? Okay, because this is what most people base their decisions off of. Well, if you applied the buy-sell line, you would have known well in advance, a couple of weeks prior to that we were already being signaled by the market, not by some fundamental analyst, but by the market that it wanted to go higher. And if you're lucky enough to be a member of one of our strategy courses, well, guess what? A buy signal was generated 2 days. Because once again, our buy signals are only in sync with the buy-sell line. And our sell signals are only in sync with the buy-sell line if it's a sell opportunity. So there's no way we were going to issue a sell signal here. I know some of you would say, Steve, this was a bearish engulfing pattern here. Boy, that's a sign of a top. I've always been taught that candlestick course I took that cost me a couple of $1,000s. We've been going higher, and this is the signal that the trend is over, and I should have shorted it right here, right? Why would you short if the background is blue? Remember, a blue sky at night, traders delight. You only want to be a buyer. So one of our strategies generated a buy signal 2 days before that earnings announcement came out. Remember, the market is telling you what it wants to do. Most of the time, we're trained to listen to the exact opposite. Some guy in a chat room, some guy in a trading room, we all know that they're supposed to know what they're talking about, right? I don't give out recommendations. I don't give out because, once again, that goes against my philosophy. It's not up to me to tell you how to trade. It's up to me to teach you what works in terms of consistency, but then let you run with it. Let you decide. That's our goal at Specialist Trading and Pro Trader Strategies. Okay, so as I stated, the market, not some guy in a chat room, not some guy even in a webinar, but the market is always telling you what it wants to do. Your only job as a trader is to listen to the market and then jump on board. Well, we just shared with you a great tool that teaches you how to listen to the market. Now, I want to have you look one last time at our disclaimer here before we go into something I usually don't do. I'm going to break precedent and actually share with you some live charts from this past month or so. So if you bear with me, if you take one last look at our disclaimer here, remember, I'm going to show you some performance results from current live charts. Please remember, though, that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all these examples are strictly for educational purposes only. So as you're taking a moment to view that, bear with me. I'm going to toggle here to look at our charts. Now, this is the PTS Primo Charting Platform. What I have here is a current chart of the spiders going back to November, December, okay? As you can see here, we had this strong sell-off in December, and then we've had a nice rally all the way back up. Could the buy-sell line have helped us? Well, let's see how the buy-sell line works. Remember, you go up to the tab here, you simply click it on, click on fluid, and look how well this works, okay? Now we had 1 day above. Remember, we need 3 to 5 days closing above to tell us that the trend has changed. Now as we look here, this was not enough to tell us that the trend had gone to the upward side, so we now still have a seller's bias. And look at how we could have either avoided the market, stayed out entirely. Let's say you stayed out entirely. Well, you didn't lose any money. And someone would say, well, yeah, but Steve, I missed that bottom. Remember, we're not here to pick bottoms or tops. That's a gambling mentality. We're here to make you consistent. And the way you become consistent is by careful patience and discipline. Now we waited here, and now what do we have? We have a number of closes above, 3 to 5 closes above, and this was in mid-January. So at this point, the market is telling us on a daily time frame that it wants to go higher. So we knew that already prior to this rally we've had this last week. So the market on a daily time frame is telling us it wants to go higher, okay? Let's look at some other charts here. Let's look at Facebook. All you have to do is simply plug it into our tab there, and it's the same thing. Look how we were below the fluid buy-sell line, and this would have kept you out of trouble. And right here, in the beginning of January, we had multiple closes above, and someone looking at this would say, well, gosh, Steve, they had this real big bounce. I assume this was because of some news. Remember, I don't follow news, so I wouldn't have any idea. And there's really no reason, in my opinion, to follow news. The same thing my mentors taught me 40 years ago. They said, why would you look at news when the market's telling you what it wants to do? And this is a perfect example. Prior to this large gap up, I knew back here that I should only be a buyer. And there were some nice opportunities here and here to go long, okay? And there was another nice opportunity right here using one of our strategies. So why would I need to worry about what the news is when I had a buy signal using one of our strategies based off this information right here, okay? Now I'm going to give you an opportunity to check out something that you may be interested in. Remember, I said I'd break precedent here. So if you're interested in looking at a particular stock and issue, we have the capability to look at futures and currency pairs as well, but we're only going to be looking at stocks right now because we have the data feed on for stocks at this point. So if you're interested in a stock, okay, I see some people here saying CMG. Okay, let's look at CMG. Just type it into the question and answer box and I'll look at it for you, okay? Let's see how that could have helped us. You simply click that on, hit apply. And same thing now. Originally in November, coming into December, we were above, so you would have looked for buy signals. But once we had these 1, 2, 3 closes below, you would have known either to exit the trade or to move your stop up or just not to be buying anything because we had that entire time below and then back above. Now at this point, we started to tell that we are now above. So this is the market telling us it wanted to go higher. Once again, the market gaps up here. We had no reason to assume why this was. We didn't care because we knew back here that the market was telling us it wanted to go higher. Here was a buy signal of one of our strategies. I believe here's another one right here. Okay, these were all buy signals coming from the buy-sell line telling us that we should only have a buyer's bias. There is no way in the world that we should be looking to sell anything, okay? Okay, let's look at some more here that you've put up. See, someone says, how about Apple? Okay, Apple. Let's look at Apple. Now look at Apple, okay? This entire time we have been below the fluid buy-sell line. And this is where some of the best sell signals occurred. You see how strong the slope is, all right? Every time you had a bounce here, you could have shorted, come down, another bounce, shorted, and multiple of our strategies would have worked really well here. Now, at this point, towards the end, beginning of February, we have been above. So for the past week, 2 weeks, the market is telling you it wants to go above. Now, does this mean it's going to stay above? No, it could easily just come right back down here on Monday or Tuesday. But until it does, we're only looking for buy signals. Now, does this mean we're going to buy at the market? No, we have to have structure. We have to have a way in which to enter. We have to have some rules in which to place our stops, in which to exit, in which to manage our money. The buy-sell line does not provide any of that. It's just telling you what side of the market to be on. Okay, now, if you are an investor, well, like on a different time frame. All you have to do is click on the time frame window here, click on weekly, and now things change. As you can see, going back to last year, we have been above the buy-sell line up until right here, and we continue to be below. So if you're an investor or a swing trader, you don't want to be buying Apple. You see, everything changes concerning the time frame you're on. So that's why I don't require that you have to look at other time frames. All that I require is to know what type of a trader you are. If you're a swing trader, then don't be concerned with intraday charts or daily charts. You're only looking at weekly bars. If you're a a short-term trader, you don't worry about what's going on in the weekly or monthly bars. All right. Let's say you're an investor. You're just holding on for your 401k. All right. Now we look at monthly bars. Then we're not concerned with weekly. We're not concerned with daily action. We just want to see what happens monthly. Well, you're okay, right? Because price is still in the blue zone, the buyer's bias. So there's no reason to worry. And you see, this phenomenon happens a lot. We will come right down to the fluid buy-sell line and then bounce up again. And look what happened here. Recently, we came right back down to it, and we've bounced a little bit. Now, it's a little too early to tell if we're going to stay above. But if you had a strategy that wanted to be a buyer, well, this is an opportune place here because it's very close to that buy-sell line, and this is where it may be bouncing. So it all depends what type of a trader you are. But there's no reason to look at the monthly bar to figure out what to do on the weekly bar. They're all out of sync right now, and that's okay. They're supposed to be. Trade the time frame that the signal was generated on. That's it, okay? Let's go back to the dailies. Okay, see some of your requests here. Someone is asking about Netflix. Okay, let's look at Netflix here. Punch it in, and we're looking at a daily bar again. And once again, beginning of January, we had consecutive closes above, and this still remains in the buyer's bias. Not telling you to buy or sell, it's just simply saying it's a buyer's bias. Now, if you're a swing trader, you look at the weekly chart, and it just happened to close this last month above. So we were below it for a little bit, and now we're above. If you're an investor in Netflix, go to a monthly, and we've been above the entire time, okay? There's been no question. Even in this sell-off here, you weren't frightened because you're still in the buyer's bias. See how simple this is. Okay, let's go back to the daily. Let's look at some more of your requests here. Let's see, someone is asking about USNA. Okay, USNA. All right, now this is safe to say that this has really been a great way to tell you that you should not have been buying this. Originally, we were above the fluid buy-sell line, telling us that we should only have a buyer's bias. But at this point, 1, 2, 3 closes below the minimum, telling us we are no longer looking at this as a buy. We're only looking at this as a sell. And you see how price many times will come up, close above, and then right back down below. Close above, below. Close above, below. You need 3 to 5 closes above. And look what happened here. Now, someone would say, well, Steve, how did you guys know this thing was going to drop down 20 points? We had no idea how low it goes. This is not a predictive tool. But do you see how the market was telling you a month in advance that you shouldn't be buying this? At 1:15, it was telling you you should not be long this anymore. Now, how did it know? Because we're listening to the market. We're not listening to some guy in a chat room or some blog or some institution. Why waste your time? Trust me, I did that 42 years ago. There's no reason to do that. All right? 42 years ago, I was doing that and I couldn't make any money. So why would I teach you to look at those same things that are not consistent? This is one of the most consistent tools I've ever used. How did it know the market was going to gap down? It didn't, but it was telling you it wants to go lower. Okay? So this is a great example here, USNA. Just to have time for a few more. Someone is asking me ULTI. Okay, ULTI. I don't know if we looked at that. Okay, ULTI. Oh, yes, this has been in the news. I think there was a buyout or a merger that came out on this. Look, this is another great example. Look at this. Okay, we gapped up on this announcement, okay? Now, prior to that, in November and December, what was the market? What was the market telling us? Not the institution, the earnings, or some blogger. The market was telling us we should only be a seller. But at this point in early January, we had 3 consecutive closes above. So right here, roughly about 260, we knew that we should not be a seller. Now, I know this is expensive stock, but you could have purchased calls or some type of spread strategy that had a bias to the long side. And look how it was perfectly telling you a month in advance of this, okay? Now, let's just apply one of our strategies, one of our most basic strategies, strategy number 4. This is how simple it is, okay? Once you know what side of the market to be on, if you're a member of one of our strategies, you would hit up the signal arrows, and guess what? 3 or 4 days before it, we had a buy signal generated. And look at these. When the market was below, look at the sell signals that were generated. This is how simple it is. When you are in sync with the market, you have a higher level of consistency. Do these signals work 100% of the time? No, you will have losses every one of the time. That's okay. You want to have something that's consistent, that's able to recoup those losses, all right? We have time for one more. HAE, someone's asking. HAE, okay. As we plot that, okay, now just off of what I've taught you today, what has the market been telling you these last 2 months? Has it been telling you it wants to go higher? No, it's been telling you it wants to go lower. Why? Because it's in the red seller's bias. Remember, red sky at morning, trader take warning. The only way you lost money here was by trying to pick a bottom and buy. Now, sure, you could have tried to pick a bottom somewhere down here, and you had been very quick, because if you held on, look what happened. It's now lower, okay? Let me see, once again, if our strategies did well with this. Punch on the signal arrows. And look at here with 3 sell signals. 2 of them most likely didn't work out. But this third one, this is what we mean by consistency. Would have made back everything and then some if you stuck with it. Now look at this. 2 days before, obviously, some news came out on this, a sell signal was generated. You see how easy this is? As long as you're in sync with the market, your level of consistency will be much, much higher, okay? Okay, we've seen about all we can here. I'm sorry we only have a limited time, but I have a great offer. As you take one last look at our disclaimer, I have a great offer for you today, so you can start looking at any stock you'd like on your own. But first, let's recap. Remember, always apply the buy-sell line. I don't care if you're an investor, a day trader, a swing trader, or an intraday trader. I don't care if you trade currency pairs, if you trade futures, forex, it makes no difference, okay? The buy-sell line is just a 50-period moving average. You can start using it right now. Any platform has the ability to plot an average. Just plot a 50-period moving average. But if you really want to get a sense of what the market's doing and how strong it is, our fluid feature really puts it into perspective. It's right there. It's just one click away. So, as I leave you today, I want you to remember this. The market, not some guy in a chat room, not some institution, not some indicator that you don't know what it's based off of, not some guru on TV, or not even some guy in a webinar, but the market, the very source of what you're trading, is always telling you what it wants to do. Your only job as a trader is to listen to what it wants to do and then jump on board. That's it. That's what will make you a consistent trader. So here's the great attendee discount we have for all of you taking time out of your Saturday morning. We're going to offer you a great discount on the PTS Primo Charting Platform. This is the educational portal that teaches you how to listen to the market. What we're going to do is offer you a 30-day trial for only $7, okay? Remember, $7. You cannot buy a large grande cup of coffee for less than $7. If you want to go out to breakfast right now, oh my God, $30, $35, $40, $50 for 2 to go out to breakfast. But you're going to get 30 days, over 40 years of trading experience, tools and techniques in a platform for only $7. Here's what's offered in that trial, I should say. The enhanced buy-sell line, 4 different ways to view the 50-period moving average, along with the fluid buy-sell line. You're also going to get our top-bottom 25% feature. This is a feature based off pattern recognition that shows you what the short-term trend is. Our strength of trend feature, something I developed with Pro Trader Strategies, a unique tool that can often identify when a trend is dissipating, when it's running out of gas, or whether it's still strong. So this is a great tool to tell you whether you should be in a position or not, or maybe thinking about getting out of it. We have a signal scanner. All right, let me show you how this works. It's so simple. You click on the signal scanner page, and automatically you get this page here, which tells you to load the symbols. We provide you with stock symbols, currency pair symbols, future symbols, and then you simply hit scan. And after you do that, you have all whatever you're looking at up here, and then it will automatically scan for buy and sell signals. As you can see here, here's the fluid feature, and then here are the buy and sell signals in accordance with that. On top of the signal scanner, we're going to give you over 90 of the most prominent technical indicators. Now, we realize we have a technical bias. Most of our information is for technicians. But if you're a fundamental trader, remember, we're not here to tell you how or how not to trade. We're just giving you information that has stood the test of time. If you like to listen to fundamental news, we're going to give you our free Bloomberg TV. This is a feature incorporated within the platform. We have a media page. Once you click on the media page, this window will appear on the platform that has live Bloomberg TV. So if you like to listen to news, economic reports, earnings reports, it's right here, easily accessible, and you can view a chart while listening to and seeing the live Bloomberg TV. And lastly, this all comes with personalized tech support. For any reason you can't pull up a chart to get the Bloomberg TV working correctly, don't worry, someone will be there to resolve the issue momentarily. So this is all included just for $7. You can decide for yourself after 30 days if this is your cup of tea or not. Remember, we're teaching you how to become consistent traders by listening to the market. We are first and foremost an educational company. 30 days for only $7. Remember, if you went out to lunch today, if you went to fast food today for 2 people, it would cost you $15, $20. $7, you're going to get 40 years of experience, trading techniques and strategies, all one click away. Here's how to take advantage of this. I developed the platform with ProTrader Strategies. You can email them at trading@protraderstrategies.com. Call them directly at area code 310-598-6677, or simply go to that link to sign up for the $7 30-day offer. And now that link is not live, but you can copy and paste that onto your browser, and it will show automatically. If you go to the chat box on the far right-hand corner of the GoToWebinar column, you'll see that we have posted a live link. All you have to do is click that on, and you'll automatically see all the offer there, and you can sign up online. Okay, we are at the end. I promised I would answer any question that you may have. I'm sorry that we only have a limited amount of time. I wasn't able to get to all of your stocks. I see that we have a lot more people interested, and a lot more people had stocks. But if you sign up for this offer, you'll be able to see that in a matter of moments what you were interested in. You can be checking them out and checking out currency pairs as well. You can be checking out futures. You can check out Bitcoin. It's up to you. We supply you with a number of different data sources. Now, on top of that, if you're an intraday trader, we have 1-minute charts, 5-minute charts, 60-minute charts, monthly, weekly. You saw the different time frames. So there is no chart, no time frame that you can't look at right now to see whether you should be a buyer with a buyer's bias or a seller's bias, okay? All right, so let me answer some of your questions. Remember, just go to your question and answer box and type them in, and I'll answer them right away. Let's see. Signal scanners for all the strategies. No, some of the strategies, you will get a few of our basic strategies on the platform. You'll have to ask ProTrader Strategies since they're in charge of all that. But the other ones, the most prominent ones, they have their own courses, and you can, contact ProTrader Strategies. They may be able to give you a discount for some of our strategies as well. Okay, I know some of the strategies are as low as $600 or $700, and they may even be able to give you a discount with the platform. James asks, 30 days trading or calendars days? I believe those are calendar days, okay? So in other words, 30 calendar days, you'll be able to have it over the weekend. They're not trading days. And for $7, I mean, trust me, I can almost guarantee that most of you spent $7 this entire last week in commission, probably more than that. So for $7, you're getting training and education that has stood the test of time, okay? People are saying, thank you very much. Oh, you're more than welcome. Adele asks, how much after 30? After 30 days, I believe it goes up to $97. But remember, that's still extremely inexpensive. I have traded platforms that cost $500 a month, and they are nowhere near the information or expertise that we allow you. So that's your decision, though. You don't remember, we have so many traders that through testimonials have told us that, gosh, for the first time, they've become consistent traders just by using our trial. But it's up to you. It's your decision. If it's not your cup of tea, then fine. We didn't cost you any more than $7, and you don't have to continue after 30 days. It's entirely up to you, okay? People are saying, can I look at futures? Yes, you can. We have futures on there as well. Remember, anything that is of a tech support question, feel free to contact ProTrader Strategies. There's absolutely no obligation. They will be happy to answer any question concerning tech support. I'm involved mainly in the teaching and the trading of the strategies and education in terms of tech support, discounts, anything along those lines. Contact ProTrader Strategies. That's their forte, and they can answer questions about this as well, okay? Now, I hope you learned something. We're a little bit different from other webinars in that even if you decide not to become a student of ours and a member of our platform, we like to leave you with something so that you can start trading with. So even if this is not your cup of tea, just go out and experiment with that 50-period moving average. Don't trade with it right away, but experiment with it to see if it works for you. I can almost guarantee that you'll see that, wow, I would have done much better had I used this simple tool. Once you've decided that it can help you, trust me, we've got dozens of more different tips and techniques and methods to help you become a consistent trader, all totally unrelated, different things I've accumulated in my 4 decades of trading. So come on board, be a student of mine, and I really look forward to all of you, most especially taking advantage of this $7 trial so that you can learn what it means like to use our platform and become a consistent trader, okay? In conclusion, as we close here, I want to thank you so much. Take advantage of this offer before it goes back up to the $97 price. And thank you so much. Have a great Saturday. I'll see you next time. Bye-bye.